Welcome and thank you for standing by. I would like to inform all participants that this conference call, as well as the Q&A, may be recorded and made available to clients of JP Morgan. Parts of this conference call may also be reproduced in JP Morgan research. If you have any objections, you may disconnect at this time. Press participants are not permitted on this call and should disconnect now. Unless otherwise permitted by internal JP Morgan policy, members of JP Morgan Investment and Corporate Banking are not permitted on this call and should disconnect now. At this time, all participants are in listen-only mode until the Q&A portion of the call. I would now like to turn the call over to Mr. Gokul Hariharan.
Yeah, hi. Good afternoon. Good morning, everyone. Thanks for joining this webinar with pretty much the whole APAC TMT tech team from JP Morgan. We will run through our thoughts on the implications from DeepSeek, as well as address some of the more pressing topics in the tech space, including tariffs as well. And then towards the end, we can start taking some questions. So we had put out a detailed note on the overall first take implications. Since then, I think several things have happened. I think there's been a lot more analysis on what DeepSeek R1 is capable of versus not capable of. There have been more models being launched from Alibaba, as well as OpenAI launching the O3 set of models in the last couple of days. Now, just putting all this into context of LLM scaling, I think just a couple of months back, the market was actually very concerned that LLM scaling is slowing down, and as a result, model performance is actually not going to improve much, even with the application of a lot of compute hardware. Now, I think the pendulum has obviously swung 180 degrees to the other direction, where market is more worried about very quick model scaling. Now, our view is that this is not really some kind of a paradigm shift. This is kind of like the continuum that we have been on in terms of LLM evolution since ChatGPT back in end of 2022. What is happening right now is a new vector in terms of model scaling is opening up, which is essentially the chain of thought reasoning or test time inference, as people call it. What does it have to do in terms of overall implications? We believe that at least in the next 12 to 18 months, this new vector will see a lot more advances in terms of potential LLM model scaling and complexity. Given it's early, the benefits of applying more compute, more memory to this vector is actually much higher. So we'll probably see a lot more innovation along these lines. Now, the other area where DeepSeek has clearly caused a lot of flutters, especially among tech hardware stocks, is on the cost per inference, which is clearly very, very low, especially for the DeepSeek R1 reasoning model. Now, again, even on this front, if you look at the longer run cost per inference token decline trends, we have been roughly declining at about 90% in terms of cost per token for the last 3 years. And this just takes it to one more dimension on the reasoning front, where pricing was extremely high from OpenAI, and now it's kind of starting to correct quite dramatically. This is clearly going to drive a lot more functionality. So we're not really very bearish on this trend. This is usually the positive trend in terms of technology adoption that we have seen in several tech cycles in the past. So I don't think that's going to be a very big issue. Secondly, I think on overall compute demand, for AI, we still think that the compute demand is likely to keep growing quite rapidly. Given that this new vector on reasoning is opening up, we will see a lot more model innovation. The pace of model innovation is likely to accelerate, I think, in the next 6 to 12 months rather than decelerate. So as a result, there is going to be a lot of competition. I think new models are probably going to come out every 1 or 2 months, and the state-of-the-art frontier models are probably going to push the envelope quite a bit in the next maybe 6 to 12 months. So that's all going to require a lot more AI compute in aggregate. In addition to that, I think there will be a lot more new AI workloads that will get enabled, given several new innovations that DeepSeek has brought in will lower the cost per inference token significantly. So that will make it a little bit more democratic in terms of AI adoption. So models which may not require the highest performance, smaller models, can actually be run in an enterprise setting at a much lower cost. It could be run even on device. in some certain circumstances. So that will definitely increase the number of AI workloads, which will have a lot of implications in terms of more AI applications, both on the enterprise side as well as on the consumer side. We'll have other speakers talk more about that in just a moment. The other big debate, or the couple of two debates, I think that's been out there. One is obviously on AI CapEx, whether this is going to slow down AI CapEx. We don't think it's going to slow down AI CapEx. A lot of the reasoning models still require very high GPU compute, a lot of memory, given the very long context window. That is not going to be enabled in an edge device at any point in time, especially when reasoning models are also developing at a very rapid pace. So that is still going to require a lot of data center compute, which means that AI CapEx is still likely to remain quite high from most of the key CSP providers in the next 12 to 18 months. I think 2025 is still going to be a very strong year. Our view is that 26 is still going to grow quite rapidly, probably 20+% kind of run rate is quite doable. A subset of this argument is the GPU versus ASIC. Given the market's view that training is done well on GPUs while inference can be done on ASICs. Our view is a little bit different. I think training versus inference is not the right framework to look at this. The more important framework to look at it would be pace of development. If the pace of model development is very fast, very likely that GPUs are still going to be used, especially NVIDIA GPUs, which every AI researcher is already familiar with, is still going to be used extensively to run a lot of these inference models as well. So as the pace continues to remain pretty fast, and as we have seen that in the last 1 week itself, there are like 3 or 4 state-of-the-art models which have already dropped since DeepSeek R1 release. A lot of that incremental AI workloads are still going to be run on GPUs. So if you look at this year, I think GPU growth is probably still going to be faster than ASIC growth. And I think ASIC is probably still going to take some time to adapt. And once the situation starts to stabilize a little bit, then I think ASIC adoption could actually start picking up. So overall, we still think that GPU demand is still going to remain pretty strong, even stronger potentially, if the pace of these reasoning model adoption and reasoning model evolution continues to stay at this kind of pace. The one unknown, though, is open models versus proprietary models. I think what DeepSeek R1 has showed is basically that open models are starting to catch up quite a bit in terms of performance compared to proprietary models like OpenAI or Google Gemini. We'll have to wait and see how this goes, because we will see iterative launches from OpenAI, from Google, from XAI, and a few other proprietary models. At the same time, we'll probably see Llama 4 from Facebook or Meta also coming out, which is going to be an open source model. But I think this race between open and proprietary is likely to continue for the next at least 2 or 3 iterations in terms of big frontier model development. Now, there is definitely a question from investors whether this like open model is going to kind of limit the investments in CapEx, given that the monetization window for a proprietary model developer is narrowing. It's a fair question, but it doesn't feel like anybody is slowing down in terms of their investments in R&D, investments in capacity, data center capacity, and compute capacity to kind of push the frontiers in terms of LLMs. Just quickly highlighting on the other area where this development could trigger some adoption is on edge AI. I think as models get more efficient, what could be run on an edge device, be it a smartphone or a PC, becomes more capable in terms of running at least simpler AI functions. Now, the pace of the development will still keep a lot of the new AI models out of completely being run on edge devices, but there could be some models which could trigger some edge AI adoption. We would probably still look at Apple as probably the leader in terms of potentially rolling out some of these new edge AI features into their devices, given their price point enables them to have much better functionality and much better specs, which will be required for a lot of these edge AI related models. So I think that's probably the other area which could drive some upside within the tech ecosystem, given that a lot of the upside in the last couple of years has been largely on data center AI. Now, quickly a word on tariffs. I think the direct tariffs that have been imposed on China and Mexico will impact pretty much all of the supply chain, especially Mexico, given it is quite relevant for server and PC. The second part, which I think is probably a little bit more concerning, is the tariff on semiconductor exports into the US. Now, we are not sure what is the mode of implementation, given direct exports from Korea or Taiwan into the US is quite small. But if it starts covering indirect exports, then it's going to be a potential risk factor and could actually have some implications on the supply chain. Lastly, I think from my side on the stocks, enabler stocks for Gen AI, TSMC, ASE, I think should continue to do well, given that overall compute demand is still going to rise. Some of it might be in the edge, but most of it is still going to be in the data center. On the edge AI front, I think MediaTek could see some more investor support in the near term, given that it is seen as a primary edge AI play in Asia. Even though our view is that numbers this year are still likely to disappoint, but market is likely to be quite supportive of this edge AI thematic. And lastly, I think the PC space could also become a potential beneficiary, especially as we roll into Q2 of the year with Computex approaching. Near term, there is definitely some concern going to be there on tariffs, etc. But once that is settled, I think we might start to see some interest in the PC space. Let me stop my part there and hand over next to Albert.
Yep. Thank you, Gokul. Hi, everyone. This is Albert from Taiwan Research Team. I cover PC and server. First, let me give you some updates on AI GPU supply demand dynamics. On the supply side, we saw some improvement in Blackwell chip production, but there's some continued bottleneck in the Bianca board level and rack level system integration. Current yields of Bianca board have improved to about 50% versus 20 to 30% in early January. We expect continued yield improvement in the next few months. Rack level production issues such as non-GPU component supply and the system optimization may take more time to resolve. Overall, we still model 2 to 3K NVL72 equivalent in first quarter and 5K in second quarter. We expect a more meaningful pickup in second half with GB300. On the demand side, we saw some price hike in hyper cloud computing recently, especially in certain regions such as Southeast Asia. We attribute the price hike to broader testing of DeepSeek model, Blackwell delay, and US restriction on China. Still, the demand hike was only limited to cloud market. The feedback from server brands suggests customers still prefer Blackwell products instead of Hopper. That's also consistent to our recent research of CoWoS cut in non-TSMC supply chain. And moving to DeepSeek's implication for AI ODM. As DeepSeek is based on open source frontier model, the disclosed number of development costs is probably not indicative for others. The recent feedback from US hyperscale also suggests heavy investment on frontier model, while the monetization and returns remain the key watch point. Therefore, we still see rising demand for power, thermal, and networking. And DeepSeek showcase a scenario where startup could roll out the Kita products with affordable cost. That implies a potential long tail structure in AI application, which is positive for server brands. However, if such demand does not require advanced hardware tools, we are likely to see price competition on commoditized product in enterprise server brands in the case. And see if inference and reasoning user case increase, we could see positive read-through for general server demand. Meta was a very good example that increased AI inference use case stimulate general server demand. And thirdly, DeepSeek implication for edge device, the MOE model enable more AI inference adoption at edge side. Although there are still some drawbacks such as latency, context, consistency, degradation, it could accelerate AI proliferation in the next few years. The beneficiary are PC and smartphone play. We estimate 5% AI PC penetration last year, and that ratio can increase to about 15%, 15 this year, with more mainstream AI PC CPU launch. And lastly, Trump tariff on Mexico and Canada. Long story short, ODM can produce and ship products outside of Mexico in the near term. So for example, they can leverage their existing factory in Europe and Asia and ship the product to US market. Hyperscale and ODM will share the incremental logistic cost. In the mid to longer term, hyperscale or brands will request ODM to build factory in US. And during the period, there could be some potential market share shift. Among ODM, Quanta and Honghai appear better positioned in this kind of trend because of existing capacity in US. However, our view is Mexico tariff will be more like a negotiation tool and can be temporary. So overall, in my space, stock recommendation wise, I like ASUS, Lenovo for HAI, Quanta Weaving for AI server growth, and Delta for growing power proxy. That concludes my part, and I will hand it over to Jay.
Thank you, Albert. Afternoon, everyone. Let me discuss about the memory sector implication. Within the memory, DRAM is more exposed to AI versus flash. We see the central bit demand mostly in HBM4, that's about 6% of the market. HAI bit demand mostly from PC and the mobile, that's about 12% of the demand. That's about 6.3 billion gigabyte this year, growing to 10 billion gigabyte next year. HBM growth has been levered to the high-end GPU for training demand, so it could be more vulnerable to any demand risk. However, it is at very early stage for no memory makers actually can quantify the impact at the moment. We haven't witnessed any material changes in short-term order dynamics at the moment. Leading training purpose GPU requires HBM contents between 192 to 288 gigabyte versus inferencing purpose GPU. They require about 32 to 64 gigabyte. And some of them actually indeed use GDDR or LPDDR, which is also cheaper versus the HBM. As 90% of HBM demand is centered around training as of today, HBM business scale down could have a revenue opportunity miss if we simply interpret it by the falling demand. However, as Gokul mentioned earlier, we could see lower workload chips potentially using higher HBM contents. And in the long run, reasoning demand could actually spur the HBM demand in the longer run. We could also see a potential HAI demand upside for multiple years with more reasonable large language model being deployed on edge devices. If we were to assume edge AI to penetrate to 100% of the total devices, using 16 gigabyte for mobile DRAM, 24 gigabyte for PC, then total mobile and the laptop demand could actually grow by 2x compared to what it is as of today. Quickly touching on implication from memory share price declining by 15% from the peak as of today. Deepseek influence the market is assuming HBM order dynamics that are slower at the beginning, but it doesn't necessarily capture the upside from the stronger HAI adoption and also not obviously pricing in the long-term reasoning demand growth opportunity. By order of HBM exposure and execution, and also technology, Hynix, in our view, stays the best in case. So as reasonably Micron. Relatively Samsung, where its exposure to NVIDIA was limited, is seeing a less impact recently from a share price. On GDDR and LPDDR side, we think a key differentiation point would be the core DRAM geometry technology. And here we actually see Hynix and Micron is in a superior position versus Samsung. Our fundamental stock preference view is unchanged among the Asian memory space. Hynix, Samsung, Nanya Tech in order, as Hynix now trades more near to 1.4 times on price to book, reaching closer to its recent valuation bottom in Q4. We think it actually offers a better buy opportunity. I'll stop my part here and hand over to next speaker, Mio.
Great. Thank you, Jay. I may just be echoing the others' comments, but from my side, let me comment on the impact of the DeepSeek on Japanese SPs and maybe a little bit on the material side as well. In the medium term of like 1-2 years, there could be some discussions on whether we are to see in CapEx correction, but at least we think the short-term effects are minimal. And in the long term, we think there are some more positive impacts than negative ones. And for SPE, the investment trends of semiconductor companies and the AI investment trends of cloud service providers are the most closely watched. With the advent of DeepSeek, the possibility of building a more cost-effective AI ecosystem is likely to advance, potentially reducing the number of chips required and their unit prices if building the same spec. However, assessing how much investment is actually going to be needed or which chips are ideal to be used, those kind of discussions may take some time to be concluded. And meanwhile, AI models to compete with DeepSeek will likely be actively researched in the US and also, of course, in other countries as well. So we do not foresee any immediate decline in investment. And in the medium term, even if we are to discuss the bear scenario, although let me emphasize this, as Gokul mentioned earlier, this is not what we are expecting. But if we were to discuss the bear scenario, if AI optimization were to temporarily decrease GPU production for data centers, we still think that advanced investments in EUV and HBM memory will likely to continue. And in the long term, as expressed by the Jevons paradox, cost-effective AI models could promote AI spread and expand the TAM, including the edge AI. The DeepSeek could be just the beginning, and we might see many cost-effective AI models being introduced, which we think could again create a cycle where better and faster chips are demanded. And in this sense, we do not see the long-term impact on equipment and semiconductor material manufacturers too negatively. The Japanese SP, Advantis, is likely the first name that comes into mind on this topic. The company has seen a significant stock price increase due to expectation of longer test times, with NVIDIA's chip shifting from Hopper to Blackwell and to possibly Riva in the future. But however, speculative discussions around test times have led to stock sell-offs post DeepSeek. And Monday, Tuesday, in just 2 days last week, the share price has dropped by 20%. Rather than a decline in the total chip numbers, we think that the possibility of using cheaper chips has shifted valuation for this name. And Disco, another name that has benefited from this Gen AI's theme, has also traded at a high above 30 times PE, but now is traded around 30 times PE, and we did see some devaluation happening. This is more to do with the HBM related topic. Other backend process related names in Japan has seen some correction last week as well. Names that I covered will include Nitobo from the material side. However, we don't think that the acceleration of cost-effective AI ecosystem and the emergence of various models are negative. As mentioned earlier, DeepSeek is just a trigger, and future developments will likely be pursued by other companies as well. And if this leads to the spread of edge AI, it is positive for SPEs. The expansion of TAM is positive for all, including the front-end equipment, back-end equipment, and materials. But in terms of equipment, I would like to focus on the front-end names rather than the back-end names. When comparing the edge AI and data centers, test time is likely greater for data centers due to the differences in the number of transistors, with which the back-end names benefit more. Front-end names are influenced by the total chip demand, and considering this, while back-end stocks have been in the spotlight due to generative AI for a while, it might be worth paying attention to the front-end names as well. The names that come up into the mind easily will be Tokyo Electron, the #1 SP company in Japan, and also Screen Holdings. From the material side, the top mask blanks player, Hoya, also comes to mind. Hoya holds the top position, not only the leading edge, but also for the legacy lines as well, and has a good exposure to any end market growing. That's all from my side, and now I'd like to pass the mic over to Anchor. Thank you.
Thank you, Mia. Hi, everyone. So quickly on the impact of DeepSeek on IT services, particularly India IT services, I think what tech services companies have been witnessing so far in the last year was increasing adoption of generative AI in the enterprise technology landscape. It's been relatively slow. Most of 2024 has been a lot more of proof of concepts, pilot projects, which is only now beginning to go into production. So now, for example, in the December quarter results, we heard a number of companies beginning to see larger scale adoptions of either small language models or agentic AI. I think this was a very common phrase from almost every tech company, a tech services company out there. So I think at a very first level implication, if DeepSeek significantly reduces the cost of compute, inference, and using AI, the potential for corporate adoption of this can get accelerated, and hence tech services, especially custom application adoption, could benefit from this. Now, the countervailing question has always been, can you see a drop in pricing, which can impact IT services companies negatively? So far, we haven't seen that yet. And the assumption is you will have some price elasticity of demand. I mean, this is just Jevon's paradox mentioned in another way. So you just have a lot more spending on the corporate side if that happens. But so far, we haven't seen enough of a negative impact per se. A lot of companies still report incremental spending on SLM adoption, on agentic AI adoption, than they have seen headwinds so far on this side. The key tech services companies that will benefit from this from India, we think, are Persistent Systems, LTI, Mindtree, and Infosys, who have the highest amount of data, AI partnerships, and AI work in their overall project portfolio. Quickly, a word on the impact of US tariffs on the sector again. Number one, I mean, just before I begin, the caveat is it's not clarified whether this is on all imports, which includes goods and services, or is it goods alone? And this has been an area of, I think, some debate before. But if it does include services, the direct impact is potentially for IT services companies, which also use nearshore, talent adoption from Mexico and Canada, which is something between 1% to 5% of their overall supply. And the second order impact is if industries like manufacturing, technology, and retail industries served by the IT services industry in India is impacted. The stocks which are potentially most exposed, should there be any kind of spending slowdown there, or there's a bit of a tariff which increases the cost of goods to be served, are Infosys, LTI, Mindtree, and HCM, which have got the highest US exposure. And the stocks least impacted are the likes of ER&D companies like KPIT Technologies, Tata Technologies, and Tata Elxsi, which have the least US exposure. With that, I'll pass it over to Ranjan.
Thank you. Hi everyone. Good evening or good morning. It's Ranjan here. I cover the ASEAN TMT space for JP Morgan based in Singapore. The launch of DeepSeek R1 put further pressure on the share prices of the data center companies in the region, and also the picks and shovels as well. We saw stock price declines of the magnitude of up to 14% on 27th of Jan. This followed declines in earnings expectations and valuations, following the U.S. Department of Commerce's interim rule on the diffusion of AI. We have a bunch of reports on it. Happy to share that after this call. The market is clearly worried about the AI capex budgets, but as all the speakers have mentioned, that if there's a sharp decline in AI costs, then it should drive rapid adoption, and that should eventually drive adoption of that should eventually drive data center demand higher in the medium to long term. Take a look at the results from Meta and Microsoft. There were a bunch of questions around capex and capex intensity, and they shared that it is too early to determine the long run capital intensity. There are a number of factors at play, including the pace of adoption, inference demand, and hardware and software efficiencies. To us, the more worrying development for the data centers in the region and the picks and shovels is the Department of Commerce's framework for artificial intelligence diffusion that went into effect from the 13th of Jan this year. The regulation controls chip exports to what they define as tier 2 and tier 3 countries. Advanced AI chips are completely restricted from tier 3 countries, which includes China and Russia. There are also now volume restrictions on chip exports to tier 2 countries, which covers most of the world and including ASEAN. This will limit data center builds in the region. It can create pockets of oversupply and could put pressure on lease rates as well. Moreover, in our view, there could also be instances of companies triggering exit clauses if they're not able to get their AI chips. We also believe that there is a risk of further restriction of chips. The framework for AI diffusion puts limits on chip exports based on total performance power of chips. The threshold at which these restrictions apply could be lowered further to cover more chips. and that would be a further risk to data center companies in the region, in our view. Hence, we have become more cautious on the data center companies in the region and their picks and shovels as well. We downgraded a bunch of companies in the region. We continue to have a favorable view on the data center industry in Singapore because of the lack of space and strong demand, and we are seeing strong rental revisions ongoing in Singapore. So if you had to pick a bunch of stocks in the region, it would be Singtel, it will be Keppel DC REIT, and also FPT in Vietnam, which benefits from IT services demand. With that, let me stop here and hand the call back to Gokul.
Thanks, Ranjan, and thanks everybody for sharing your thoughts. We will conclude our session here. Thanks everybody for dialing in, and if you have any further follow-ups, given that this is still an evolving topic, do reach out to any one of us. Thank you, and have a good day.